I'm Bambi Francisco for Vader News, and I'm speaking with Andy Klein. He's the founder of Spotzer, as well as Wit Capital. He's also the pioneer in taking companies public on the internet. Andy, back in 1995, 14 years ago, you brought Spring Street Brewing Company public on the internet. That's when I first met you. And despite the fact that the internet is now very, very mainstream, we haven't seen, or at least I've not heard of, that many internet offerings yet. So why haven't we seen that many internet offerings?
Well, I think we've seen the internet become, like the telephone, just a fact of life. And so we've certainly seen at the big investment banks a complete adoption of internet as one of the ways to market securities. And so at the public offering level, internet's quite often used by banks to distribute notices and prospectuses. So it's not exactly right to say it's not part of the capital raising process. What I don't think we've seen a lot of are if you will, the more early stage efforts to get small companies married to shareholders purely or largely through the internet, and I think there are some good reasons and perhaps some overlooked opportunities there.
Right. You used something that not many people know. It's called Regulation A, a vehicle called Regulation A, and I think that allows companies to raise up to $5 million. That's really in the space of sort of a lot of the companies that want to raise venture capital. That's what you're talking about. You don't see that many people using this Regulation A.
Yeah, that's right. And I can't really tell you why. I think it was surprising to me back in 1995 that not many securities lawyers and certainly not many companies knew about Reg A, and it really hasn't changed much today.
What was the biggest challenge back then in taking a company public on the internet and trying to raise funds from all of these individuals? I don't know how many individual investors you ended up raising money from.
Back when we started in '95, the biggest challenge was getting people to know about the offering. We were very lucky, and frankly, what made my career and what made my beer company's offering work were people like you in the media. We put out a press release that announced that this little beer company had opened the first public stock offering on the internet, and 600 newspaper stories later, we had 3,000 investors buying from our website.
And a story on CNN for me.
That's right. What we did at Wit Capital in the next 5 or 6 years was build a platform through which other companies that didn't have that benefit of getting famous on the newspaper pages to have a way to reach small investors, and that worked to a large extent. But what happened in the late 1990s with the insane period of frenzy around public stock offerings is that all of the investors were clamoring for shares in the hottest IPOs. IPOs were going 200% up in the first days. Everyone wanted a piece of that. That became what internet offerings were all about in the boom years. And then the world fell apart and the internet bubble popped.
Right.
And it really hasn't yet gone back to a day where small investors were out there looking for venture stage investments.
Which was really what Spring Street was.
Which is what Spring Street was really all about, and in fact what we started out trying to do at Wit Capital. The interesting question I think today is have we gotten yet back to a point where public equity markets are not so interesting, are not so guaranteed, are not exploding week by week, so that maybe people are interested again in venture and early stage investing? I hope so, because I think it would be timely and it would be good for entrepreneurs and it would be good for investors if there were ways today using the technology that's come so enormously far in the 15 years since to find a way to meet each other. No one's really done that yet. No one's really put that to test. And so I think the next 5 years or so, could be very interesting.
But you have to use this vehicle called Reg A. Still.
Well, Reg A is just one of the many ways companies can get in a position legally to go public. It happens to be the one designed for small companies without big budgets for lawyers or expensive advisors that can essentially do it themselves. So Reg A is designed really to be understandable, to be relatively efficient, and to allow companies that go through a certain amount of preparation to make offerings to the public. But even full-blown public offerings, which require just a bit more investment up front, are also accessible by smaller companies if they have the time and the resources to try.
What are the if someone were to sit down and say to you, Andy, I want to do a Reg A offering for my company today, what would be the challenges? How would you advise them?
Well, I would ask them to think long and hard about who the investor is that they're trying to reach. And companies that have a built-in following are great candidates for Reg A offerings. That's what started me down the path. I had beer enthusiasts who liked my beer, and we thought they could become investors. In fact, a big part of what WIT Capital did in the context of the public offering space was try to connect companies going public with their own customers, their users, their affinity groups. And so if you have an audience and you have an interesting investment proposition, the internet can be a simple way to put those together. If you don't have that, if you sell to businesses or you have a few big customers, you better have a good idea how you're going to get the word out, because short of getting lucky and finding that the new media replaces what the newspapers did, it's hard, because marketing at the end of the day is an important part of it. Unless you get an audience, you won't get investors.
But even despite the affinity, because you had a lot of people who liked Spring Street Brewing, who liked your beer, you still needed to have a selling mechanism, or people closing the deal.
Yeah, that's right. And the other thing that I think has been over the years underestimated by a lot of people who have thought about doing public offerings through Reg D is the closing process. That is, you can use the internet and email and the press to generate leads, but still securities, as the old saying goes, are sold, they're not bought. And so getting on the phone with somebody or exchanging email with a potential investor is probably a necessary piece of it. And if you leave that out and you don't plan for that, you can wind up doing a lot of work up front, putting up your prospectus, announcing the offering, and then not having success. So selling stock, raising money, in my experience, is always a bit of hard work and salesmanship, and the internet doesn't make that go away.
Two more questions. The difference between 95 and 2009 that makes this type of offering a more viable option for companies, what are they? The differences?
Well, I think there's some huge positives and some big unknowns. I mean, clearly the degree to which the internet has become ubiquitous, the number of people online, the number of people with broadband that can look at a roadshow video, that can participate, is almost gone to 100%. Back in '95, you had a very, very small pioneering group of people out there looking at content on the web. The appetite of investors, that's a real unknown. Back in '95, I'd say before the tech boom, it was very, very, very early adopters that were looking to do venture-like investing. Now you've seen two market bubbles, two market collapses. Investors are beat up pretty badly, and have been for a long time. So I don't really know where the head of most investors is today. I think it's going to be interesting to find out.
I think that's a good point. There are a number of companies. The difference between 95 and 2009 is that there are a lot more companies now that probably can be sustainable businesses at a very, making a couple $1 million, $1 million or so, and have affinity with users because of the internet. So I think one of the reasons with Capital, you said that it moved off from taking care of these venture-styled companies, these early-stage companies, and moved on to the big guys, was because there weren't enough small companies that you really wanted to. It wasn't big. It wasn't a business there. There wasn't a business there. Is there a business today for an investment bank who might want to just pump out these Reg A offerings?
I don't know. I think I agree with the first premise, that is that it has fundamentally changed the nature of what it takes to become successful in a business. Less capital, more technology readily available, lots of smart people that have been through startups before. So I think you're absolutely right that there are more companies that have a chance of making it fairly big with a limited amount of capital, and that is interesting. Can you build a business as an investment bank doing deals like that? I'm not sure. The classic challenge for the investment banking community has been that the sliver of companies that were good enough to be interesting and were raising enough money to make it remunerative was pretty slim when you looked at the top tier of the venture seeking companies being picked off by the very big venture funds. And now you have so many venture funds with so much venture money that, you know, how big that sector is, I don't know. But clearly we're going to have less venture firms next year than we had in the past. And we're going to have a lot of new companies started with less and less money. So I would like to hope that that's going to become a bigger opportunity than maybe it was before.
Well, Andy, back in '95, bet you didn't know that some people 15 years later would be looking to you for some advice and wisdom about your experience with Spring Street Brewing. Thanks for coming by, Andy.
Great to see you again, and thanks for having me.
I've been speaking with Andy Klein. He is the founder of Spotzer as well as Wit Capital, the pioneer in taking companies public on the internet. I'm Bambi Francisco.